0.99 pure grade gold and silver percentage of that journey. Okay, if you do it now. So this is bad data. I don't trust them. They lie. In fact, there's a gentleman called ShadowStats. ShadowStats. John Williams. Get absolutely nothing from him. Never met him personally. But I admire people that try to get to a more accurate truth. So I'm quite happy to put him forward. He does his version of inflation. He does his version of unemployment figures. And what he chose as a base year was 1982-3, the Ronald Reagan era. That's not to say there wasn't skullduggery, crookery, and a whole bunch of other things going on during that period. Before that, but in his mind, the scale went perverse. They started fiddling with the basket size and everything. And this is hiding real inflation. Hide real inflation. And what you can actually do here is you can actually do calculations way back when, and I will show you a couple that I've done in his calculator here. And I've also downloaded the BLS data. So I'm going to show you an Excel spreadsheet, and even better, a chart. No one wants to see a spreadsheet. It's the source data, where I've taken the BLS data from the deceiving, lying government that in John Williams' view probably weren't that great before, but probably attempted to be accurate. Remember, you're never going to get 100% truth on stats, even if you're looking at it. You're trying to get as accurate as possible. Truth is not the word to use, accuracy. As close in an environment where certain things are flexing to a reasonable degree. And we're going to compare gold's relative value, that chart you saw, divided by government stats. I'm going to generate a chart on government stats and generate a chart for gold, and I'm then going to bring in silver into this discussion to show you how late you are to what is likely to be the greatest seismic move ever made in gold and silver. And it's such a problem, the scale of this move, in that intervention by government, state for confiscation, taxation, wealth taxes on bullion are almost assured in some form at some point. And you should have defenses therefore, because it will happen. You're going to make too much money, you're going to be hated, and they're going to get the useful idiot peasants to justify laws to tax the rich, for which you as a middle class person who sought to protect your money will automatically be positioned as. So let's move forward and let's take the story forward. So here is the stats that we put together. I did another final thing. I'm also going to show you the Dow. Now, I couldn't get stats for the NASDAQ. It also hasn't been as long around as the Dow. I'm going to show you what percent of the Dow you could buy with an ounce of gold for those that tell you gold is overvalued right now. I'm going to show you what percent of the Dow you buy with silver for those that tell you that silver is way overvalued right now. So I'm putting this to the tweet that Brent has put out and is asking the question, and I applaud him. I'm just holding up the other side of the argument. This is a respectful debate, a clip where we will do certain things. So let me show you a couple of charts. Here is gold in USD since 1968, the year of my birth, $35. This is the percentage gold that you'll buy of the Dow. Roughly you're at about 900, 855 there. This is about 35, 4%. Divide 35 by 4. If it's 36, it's 9. Times it by 100, you get to 900. You can see the mass, it's about 4.11%. You can see it's accurate. This is the inflator of gold BLS. So if you took the inflation that subsequently occurred from 82, our base year is 82. So the years before 82, 83, the inflation index increases the gold price. The years after, it's a deflator. It decreases the real value of gold that you can buy it for today, because inflation is nibbling the value of that dollar. Because a dollar later in the future is worth less than a dollar today. So I'm hoping you're understanding what I'm doing. And let's go straight to the charts, because people don't just want to look at colored numbers And here are the stats, by the way. And there's another core thing that I had to do. In 2 of the years, because the BLS and John's ShadowStats were only available to me from 70, I took the aggregate percentage of inflation throughout the entire sheet from 70 to 2020. I think that's the year. From 70 to 2020, 50 years. I took the aggregate of inflation and I put that as fixed for the 2 years that I was missing data, so that we could start at 68, the year of my birth. Okay, so you know how old this old brute is. Okay, so that's the only, and I grade that box to say it's assumed data, okay, which I think is reasonable. Can I also say it's conservative because the 70s were a period of high inflation? Here the data starts 6.1, 6.15, 5.8, 6.6. That's government stats. The first column is their admittance. This is John's, which is higher. So to say coming into the high inflation, stagflationary era of stubbornly high inflation of the 70s, which all brought about by Nixon's devaluation and overspend in the military industrial complex that saw everyone want to hand back the paper for the gold in the rest of the world. And eventually only after this event was it made allowable for citizens to buy gold again. Okay, so what happened? Let's have a look at that data and let's show you the key base year, which was 83. This green line is the highs of gold. This was for the year, it wasn't the ultimate high. The ultimate high was around $850. So this was that particular month aggregated over that month. And when we get to 82, 83, you will see we're at 99.9 and 100. This was the base years for the stats. From then, the BLS stats stayed low and John's shadow stats showed a different inflation. So we are having a fork. We're accepting BLS up until that point. A big assumption, and it makes this conservative. In the same way, 3.97 in a stagflationary era where we start with 6% is also conservative. Okay, so you're following me what I'm doing, because I really want you to understand this is a critical vid. Base year in red. Boom, done. Okay, here's your chart for those that say gold is overbought. I'm going to do 4 charts. The Dow we'll do separately, even though I'm including the data. So what am I doing? I'm selecting the data area for anyone. I'm pretty basically clueless on Excel. I'm adequate at best. And I'm going to delete that chart. We'll come back to that. That means I have to select that area again, which I will do patiently without cussing. Okay, you're gonna find this fascinating, and I respect this is quite a technical, but this is your truth and this is your answer right here in charts on the scale of the malfeasance of government. This is unheralded. So we click there, we say we want charts, we choose more charts, and we get that chart and we go, okay, then this is what I want you to see. We're now doing technical analysis of our own data. I'd love to have this plugged into TradingView. I'd love to be able to generate these on TradingView. I'd love to be able to throw indicators. Now the Dow one is the orange one that's flat along the bottom. Ignore that line. The blue one is your gold price. Now this data only went up to the end of June for these BLS stats. We don't have the July and we don't have the first week of August. So there's a little bit missing of the most recent future. This is a historical analysis more than anything else. Okay, so the blue line is the current gold to dollar. No surprises there, you recognize the chart. Taken out the all-time high. Okay, the gray line. This is government stats, the value of the dollar deflated. Now the gray line merges into the orange line from the 80s. So there was a fork where you now have 2 lines from this point. We get into draw mode from this point. So that orange line belongs to the gray line, then you follow the gray line. That is BLS stats. You haven't even made a new high compared to a truncated bull market according to me. Yes, running from 268, which was the 2000 lows, all the way to 1927 was a truncated bull by reference of the gold-silver ratio. I've already discussed that. I'm not going back there. So by BLS stats, you've never seen the 80s boom high by BLS stats and inflation. So the amount that the money is being devalued, according to government, that's your current gold value. You're still just bottoming out of this trend. Now the killer line, if you think prices of gold, and let's just do a little bit of validation before we talk about this. If I go to my Snagit and show you a few key years, let's show you this key year. 2067 in 1933. Which stats make more sense to you? Gold, by government's decree, inflation should be 419.58. 1933, I've taken the last time you could legally own gold, and it was $20 for many years before that. So I've taken a lot of compounded years out of that. The last year before 34 and the call that made it illegal and everyone should recapitalize the nation and give their gold to the state. 1933, $20.67. With ShadowStats, the gold should be 2,800 today, up to June 2020. BLS stats, 419. Now, I'm not saying one is 100% right. Which one sounds right? Just common sense. Which one sounds right? I need you to have some degree of confidence in this orange line that I'm about to refer back to. Okay, that's one data point. What about another time? In 1834, by the way, it raised the price of gold to 2069. So I've taken 1834, 100 years, to 1933 at a fixed price that's still the same. It was actually 2 cents less. Assumed no inflation. Okay. Let's have a look at another data point. When they made it 35 after government stole it in 1944, during the end of the war, the Bretton Woods Agreement. Gold should be today $509 or $3,403. Which do you think? Sounds more right. Maybe the truth's in between. Maybe it's in between but closer to ShadowStats. Maybe it's beyond ShadowStats. I don't know. I'm just asking you, how do you feel about them government stats? So if we took the extremity, this is a bit of a perversion now, but this will give you and open your mind to what's possible. If we took the $850 high in 1980 and we deflated and said, this should be the buying power, $850 buying power today. So if you earned $850 a month in 1980, is it the same as 2,800, the better part of 40 years of QE and inflation, or is it 18,804? You would have lived pretty well on $850 a month. That is essentially about 10,000 a year, 11,000 a year. Okay, now that's where gold should be if it meets the high. If it just met the high of the Vietnam Nixon event, and you've got to decide, is that a more globalized event than what we're doing and having right now? Or is it a lesser? If you surpass that high, you're beyond. You're beyond for gold. So a couple of data points for you. 589 was the average in the year 1980. So just average in the year, not looking at the absolute spike. 11,000 today, 11,800 essentially, or 1,800. 10x difference in 40 years. That's the cost of compounding and deflating your money, guys. The greatest thing is people don't understand the power of compound interest and the money lender's special trick of devaluing you by nibble, death by a thousand cuts, each year a little cut. You are a bled out body within a short period of time. Did a couple more key data points just to make you think out loud. 1990, when we were near the dot-com bubble move, gold should be 756 today on BLS stats. gold should be 4.5. That was the 90s low. That was when the gold-silver ratio chart I started off showing you here was at 102. 1990. The gold-silver chart was at 102. It wasn't the lowest value of gold. It was the highest value of the gold-silver ratio. If you get confused, I understand. That's what we should be today. Shadow stats, BLS stats. You decide. What other data points did we do? 4.5 versus 756 in 1990. I did 2 of those. What else did I do? 92. It was an interesting year. 332. This is low for gold. It's still around 100 and turning. 3,000 according to ShadowStats. BLS 604. This is according to Regan's stats. He hasn't made this up. He's just applied the rule they had at one point going forward. 274. This was the lows of 2000. The recession, deflation, the dot-com bubble burst. To me, the first beginning of the real depression, and they reflated a property bubble to distract everybody and dropped interest rates so viciously low. It was the last time that we didn't use QE. We were still to do the QE that came in the property bust. Gold should have been $406 today when it was $274 in 2000, 20 years ago. Or it should be $1,500. From a low point, from the lowest low point, applying the inflationary structure of Reagan. So these points, I'm hoping just give you a little stop gap. What was the last one I did? I don't need to go to every single one. A dollar amount of 1531, that was the aggregate in 2011, with 9 years. Now the compounding factor is a lot less. We're just adding 9 years. We should be 1,700 today. We should be 3,200 today. 3.3. Remember when we were looking over the big time frames, which one looked more accurate? It's a bit harder to assess now. We should be higher, guys. We should be higher. This is your gold chart. So here's the orange line, and that's why I did the sidebar. If I go with a bottom line in the sweetest color of all, and it's absolutely horizontal, you have never been so low in current valuation of money according to the Regan inflation statistics on gold. In fact, if 1819 was the biggest buy opportunity, regardless of the value that you had, and we speak of our relative low 2, and we also gave the buy signal here on the break of the falling wedge on an upside HVF, which all coincides with this level. Right there. There was your falling wedge in there on an upside squeezy Japanesey. So the move of gold in this yellow line, from here to here, this is what I call little pippy. This is when you're 3 years old and you pull it out for a tiny little tinkle by the roadside. It's little pippy. Little pippy in increase in valuation on Regan era statistics adjusted has given you that move. That's little pippy. So now I want to show you what happens if we do big pippy. What happens if we go from here to that relative valuation there, which was the subprime crisis and the mini bull. You can see now in real stats why I say this is a truncated bull. Look at that and see why that was never that. So if we go to medium PP, that was the subprime only spiller, which I've already stated is inadequate in my view, and we will surpass. What gradient of climb in gold do you get for that move? And it doesn't have to be at that rate. I just don't have real estate to draw. It could take a while to get up there, because don't forget, they're going to print like gangbusters and inflation will be there. How do you think this will have moved? Look how this has moved since 19RL2. The actual move I did incorrectly. If I'm doing it from that low point there, should have been from my relative low 2. I kind of did it right, sorry. But you could have argued it touched first there and you would be there. That's your move. Slightly bigger. So that's if you meet 2008. What do you think happens? What do you think happens? That small gradient in relative valuation there has given you 1,050 to 2,050. $1,000. That move in elevation has given you $1,000. What do you think? Let's do that one in a different color, because I'm trying to get a sense of proportionality for you, just to dine out on the reference that I'm giving you, and why your biggest concern is how you're going to defend what you have from reaching overreaching state. That is still too high. That's how much you made. That's about 1/5 of that box. You made $1,000 on gold. 1/5. What is the full? It's $5,000, isn't it? 5,000 onto where we are now. Let's call it 2,000. Is 7,000 gold. That's if you just do medium-sized pipi. Meanwhile, your nickname is Donkey Schlong. There's no medium pipi here. There's no little pipi here. If we go all the way to here, and that move gets you $1,000, that move gets you a new $5,000, and this is 5 times that. That's a $25,000 move onto where you are. That's 27K. That's not surpassing the Nixon Vietnam printathon for the military industrial complex and his Henry Kissinger dark state masters. You're at 27K. If you reach there, you're at 7K if you reach here. And I'm saying my scenario takes you lower than 16.5 to 10. Now here's where we need to bring in silver. If this is someplace 30K or above gold, some of you are going like, really, 30K? I think it'd go between 30 and 100K. And silver goes 10, 9.99. Let's say it gives me my single digit by a single tick. Silver price, 3,000. Just saying. It's Chinese arithmetic we're doing here. It's Chinese arithmetic, if that's $1,000, because that would require that this goes up linearly. In other words, one box will equal a box. What actually happens is you get parabola. I'm actually saying going up linearly is another conservative data point. In the same way, putting 3.97% during stagflation is a conservative data point. In the same way that only assuming they were fiddling with stats from Reagan era is a conservative data point. In short, 30K to 100K gold. And this is not saying anything about gold. This is saying everything about the fiat failure. How much do you think they'll print? As I answered to the other man, they will print in perpetuity. And in fact, Christine Lagarde has even said that. Quantitative easing as an ongoing economic policy. This is government deciding who gets money. Good slave, bad slave. Now they truly are what they always wanted to be. Your God. Your social score, your standing, your payer, your boss, the people you work for, the people you ask permission to not wear a mask for, everything. That is the game, guys. That is the game. Now, if you think that is one chart I've got 3 more for you. And you need to see every single one. We haven't yet done silver. And if you think this is exciting, it blows that out the water. Okay, so let's carry on. I am the biggest metals bull in the room. Peter Schiff has got nothing on me. We haven't yet begun to fight. But the problems are different. You have problems. You have problems that you're going to do too damn well. Like Mike Milken, when he made $500 million in a year when that was still real money. Created the junk bond market. You reach a point where you're resent-worthy. And those that fail to prepare, those that fail to understand history get rewarded as useful idiots for voting and approving, like the crabs in the bucket, that the low IQ masses that haven't done their homework will seek to have you pulled down. Now, it's an important point that for silver, the last month and a bit, you'll see that this goes to June, the end of June. It's a very important point. Put it in draw mode. June. We do not have July and we do not have the first week of August. So I am going to draw, and this is completely ad hoc and will not be precise, what's actually happened on silver to this point. And I'm going to assume a degree of trajectory on the BLS stats, but not as sharp. And on this aggregated, that's aggressive for me. I'll just take it back because I drew like a punk. Unfortunately, this is it. We don't have a BLS adjustment for the last 2 months. That is steep with BLS stats, without what I've just drawn, even though it's small. That's also quite assuming steep, and the price is the price. Let's go up to there. Okay? So we're looking at the history of relative valuation. What's happened in the last month and a week, 5, call it 6 weeks, is less important. Okay, so here's what you need to understand. Same thing. Silver's price here, as divided by government's official stats, that's without contesting anything, saying, we believe you, you've never told a lie, you've never manipulated to favor it, to undermine, to understate the degree of inflation so that you could continue to print money. You've never done anything according to them. This is where you are in silver. Remember the fork from the 80s? So you only have the blue and the orange line. There was a fork. So everything that happened before this point is deemed accurate, and both the orange and the gray line are the same. And then you forked. So they only started cheating 82, 83 from the base year of 100. That's where you are silver. That's where you are silver in terms of the government stats. And you saw me draw a very steep line. Let me do our transgender bottoming, the line of along the bottoms. By very force of its nature, it has to be in pink. So the orange line in silver 3 times touched this level and has never been this low. Ever. There. There. And your COVID-19 dip there. Which actually was probably the lowest low. You've just got no basis of comparison ever for the stats that I have. That's 76. And we've got prices from 68. And I assume 2 years of inflation on our best behalf, not looking to be too aggressive, even though it was a stagflationary era. So that's where your silver valuation relative to the buying power of money is today. If you deflated silver's current price by the inflation index, that's where you are. Now I ask you the same question I asked you in gold, only it's infinitely more extreme. If this recent little bump took you from 11 back up to, and I think this one had 19 as the price in silver, 1854. That's the last price, known price. So you had 1854. You went from 1175 to 1854. Let's call it $7. If that bump little off the low, don't forget that line I drew myself, from there gives you $7. What will a move assuming linear, not parabola, in other words proportionate by scale for a move in the real terms, what will that move give you? Well, it'll give you 5 times more. So it'll give you, and that's ridiculous because we've actually only moved a little bit more and we've already gone all the way to 30. So if I go from here and say, actually, I can't do this, I've got to, it's just so, take that off. So what we're saying is this move, the blue move, if I include my extra little line that I think is quite steep, has actually taken you to there. Let's call it 27.5 from 11. You've done $16 on that line. $16 on that line. How many boxes are we stacking if we do the same there? 4 times more. 4 times 16, 40 and 24. Assuming it's linear. 64. Add 64 to the 27 you already have. You're already on very close to double digits. You're on about $71. If we go all the way to Big Pippy, I don't even want to work it out. I don't even want to try work it out. Because you got $16 out of that. You're going to have $64 out of that. How many times does this 64 go into here? You're 4 digits, silver. But that also adds up with being 10 times ratio on a gold that will be 30,000 to 100,000. We're talking about insane loss of value in the global first world currencies that you already seen a spike that big. So to the silver and gold is overvalued people, I ask that you guys to just show them this line or this video. And I should remove that little draw because we've barely bottomed off the all-time low in inflationary terms, according to Regan stats. He didn't make anything up. Let's do the valuation to equities, because some people will say, but equities will go to the moon. Yes, I think some will, particularly the oligarchical ones. You're going to have Apple will be a 5 trillion company shortly, not decade, shortly. But it's going to say more about the dollar than it's going to say about Apple. In actual fact, I don't think they've been particularly innovative or particularly great now. They're in the incremental cash cow phase. But that's what's going to happen. I mean, all the Israelis were told to buy it a long time ago. I remember the Zero Hedge article that came out. I mean, yeah, it's going to hold value in an inflationary environment. It's going to be great wealth. So let's have a look at gold in terms of the Dow. So those that say gold is overvalued. So we've taken the current Dow. It'll only go up to June. And let's show you a chart, because I'm a chartist. Pictures mean stuff, but you need to have good data. All this data is cleaned. It's proper data. And we're nearly finished, for those of you that's watching. And I'm pretty sure you'll find this significant. Cancel. Sorry, I need just the one column. I'm seeing like why there's two charts there. So we're going to do a chart of the percentage of the Dow that a single ounce of gold will buy you. So that's what you're going to be looking at. Come on. Allow me to make this nice and large. Because this is why they tell you that gold is overvalued and stocks represent better value. That's the percentage an ounce of gold buys. You have literally just finished a major multi-decade secular double bottom low. I'm guessing in the gold scenario that's probably the lowest point. We'll transgender the basing line there a little bit. Let's try again. You've just done a double bottom. Now for those of you that say we had a full bull market in gold and the culture of equity was given up and it was just gold and everyone was buying gold and everyone's a gold bug and everyone's gone nuts for gold, silver and all of that. That was your gold bull 2011 and your subsequent bear. That was your end of real money decoupling. And I'm asking you, which triangle do you think you're going to get this time? The second one or the first one? And could you get bigger than either? Could you get smaller than either? I don't know. I can't tell you I know. I'm betting on something representing the first one on the left-hand side and potentially larger. That means stocks could run into a bit of trouble because a whole bunch of money is going to get destroyed. A whole bunch of peasants are going to be made. Peasants don't buy stuff. They scratch around for food. That's the global Bolshevism that's coming. That is gold. How much of the Dow? Not the NASDAQ. How much flatter will that look if it were the NASDAQ? Your tech control Bolshevik, Nazi, censorship, oligarchical, dark state entities. How much would it be? So that's that. Last chart and I'm done and I'm going to make it quick. Because this is for real, serious gold and silver investors that want to understand. So my submission to you and to Brent Johnson and everybody else is this game hasn't even begun. Nobody's late for anything. Even if you just start monthly accumulating, there'll be the nature and the depolarizing of the Great Reset event will be determined by those that got metals and those that didn't. Even if you start now and you start with $20 a week, you're going to be you'll still be feeding yourself as a peasant when the others have petered out and are rolling up to UBI, getting stabbed with whatever they want to put in their bodies. That is silver. And that is silver. Over 4% of the Dow could be purchased with an ounce of silver at the extreme high that went with the precious metals bull of the 80s. And you want to tell me that could never happen again on the same scale? What begets high volatility? Extreme low volatility. Not only will there be multiple legs to this, it will surpass your belief. The game is to sit. I'm a trader. I want to get in, take profits. This is not a trading game. This is get in and sit. The leverage is not required. The move will make you the money. Do not be shaken out. Wait till single digit, as I've said, and I reiterate and repeat, with full data analysis, with full statistical deflationary with real numbers that probably more reflect the truth, because at the end of the day, I want to know the best and most accurate set of circumstances. I am focused and intent about accuracy. I am a price behavior specialist. I am here to help people trade the Great Reset. If you want to be part of this community, the links are at the bottom. But that is an all-time low on silver against the Dow. The Dow, not the NASDAQ. Could be a lot worse. Actually, it's not correct. I said an all-time low. Your 2000s, 90s to 2000s was very, very poor as well. That was your bull run. That was your bull run. It was a truncated bull run. The culture of equity has grown so powerful, we could have a huge cyclical period where the culture of equity never happens again. Who's going to be the investors once you're all peasants on UBI? On an ever-printing money? Who's going to be buying loads of things? Just the control structure citizens. There will be a huge dearth in the haves and have-nots. It's going to accelerate. It's not going to close. And they're going to tax the rich. When they say tax the rich, they're going to not tax their oligarchical Amazon friends or anything. They will tax them. They will give them back in government contracts to the nth degree. It's for the middle. They want to kill the Burgoy. It's in their scriptures. It's what they've written. They have to kill the middle. They want absolute control over you. Sounds a bit weird. Okay, sorry. Which triangle do you think you're going to get? Let's say you would never get one that big, and never say never, because you've never had such low volatility grinding along the bottom. That's how much of the Dow silver gets you. By the way, what's that number? Let me just remind you what that number is. The number is less than 0.07%. Let me just make this chart a little bit smaller so you can see the data. 0.07%. And it got you 4% once. 0.07, a fraction of a tenth of a percent. 0.1 is a tenth of a percent. We haven't even got a tenth of a percent. Ladies and gentlemen, that is my case for why the precious metals bull is going to be far larger than anyone expects. The likes of Peter Schiff and those that are selling are not serving you in some way because they're not making you aware of the great extent of your potential of success and the backlash that may bring in terms of government confiscation, wealth taxes. If you do not hold it, you do not own it. I will use Bullion Vault. If you want to support me, click the link, but I will collect. I have reserve bars and I will collect as this thing moves into higher gear. And anything, if they stop the recorder, anything you have trapped there can be seized, taxed, etc. You should have invoices for sale and selling it on at the point that you would lock it in, whether you've sold it or not. Because the thieves will come. And the greatest thief is the government that has put you on the receiving end of a currency destroying scam that sees them proliferate and give to their special interests and see you being in an ongoing dilution that keeps you having to run on a treadmill. I am here for freedom, lifestyle, and choice of existence. I am passionate about it. I'm passionate about charts, real data, and accuracy. Book a call if you want to chat, but we are running out of spaces for TMPs. We may have to call time for a while. You'll go on a waiting list. Our self-studies are available. You still will have a good chat. You will talk not to a salesman, but another member of our community. I'm Francis Hunt. That's the case for extreme gold valuation. Single digits for purchasing houses in terms of gold ounces. All of this can and has a high probability of coming. With that, I'll let you go. Thanks for watching a long video. Bye.